Hi everyone, let's go over my low time frame bullish and bearish scenarios, including a new potential trading scenario, starting with the low time frame Elliott Wave bullish scenario on Bitcoin, where we're looking for a 1, 2, 3, 4, and then eventually a wave 5 to the upside, where an interesting target still is going to be the range highs of 2022 at 32.4k. Now, looking into this wave 4 over here, we're looking at a zigzag, which then is a 5-3-5 wave structure, where the most common target for this wave C, in this then being an ABC, is the white box that you see on the chart. So currently we are ranging inside this white box. So this is an important target area, and as you can see so far, very nicely respected. And you also see two other color fibs. You see the orange one and the green one. Now the orange one, the 0.5, is the maximum retracement target for a wave 4, usually closing candles below the 0.5 is not something you like to see. Now, if we then zoom in and we're on the 1 hour chart, you can see that we actually closed one candle over here below the 0.5 fib. Usually not something you like to see. However, that is why I wrote fibs pivot on my chart as well, because this 0.5 is pulled from this pivot over here, the end of wave 2, to then the high of wave 3. But if we go to the lowest pivot that has been made in this wave 2, which is the low over here, and I actually change the fib to that lower pivot, then you can see, if we zoom in once again, that there is no 1 hour candle closing below the 0.5 fib. So in my opinion, what is happening here at the moment is still valid for a wave 4. Of course, the retracement is deep, and the 0.5 is, I guess, it's not necessarily a very rare target, but the best target for a wave 4, or the most common, is 382. The 0.5 is still very valid. And if we take the other pivot, you can see it is still nicely respected. Also right on top of the key level that I mentioned in my previous video, where I said, yo, if price is going to move to the downside, man, it really has to hold. This little range over here, this little structure needs to hold the whole price action to the downside for eventually potentially having more upside. If this range over here is failing and we get into this gap over here, I can imagine lower prices are going to be happening, where my next target box is all the way here around 28k. So that is quite a drop. So basically this little range definitely has to hold the price action at the moment, and so far it's doing a good job. Now what you also see, as mentioned, are the green fibs on the chart, and that is the golden pocket that is pulled from this low to this high. And you might be wondering, hey, oh mate, why are you actually taking this low for a pivot pull and not the low of wave 2? And that actually has to do with the CVD divergences, as well as of course confluence with this range, as the golden pocket has confluence now with the range as well, but also with the CVD divergences. So let's have a look. I'm on the 1 hour for the CVD divergences, and if you look at the chart right now, you can already see that currently price is making a higher low, but on the CVD line, especially the yellow line one should look at the moment, we are creating a lower low. So over here, this pivot, right, has this low on the CVD line, and as you can see, the yellow line is currently below this line over here, or this part of the line, right? So we have a higher high or a higher low in price, but we have a lower low in CVD, which is a bullish divergence. And in a bullish market structure, I do like to use ranges for potential pivots and CVD divergences as well. So ranges like these, for me personally, in you know what I use for trading in a bullish market structure, which of course we've had over the past weeks, if not months, of course, I do like to use these ranges as well for a little bit of additional confluence potentially. So yeah, we do have over here a higher low, but on the CVD a lower low for potentially a bullish divergence. And another thing that I like to say is we did not see bearish divergences. So usually if we are at a very big reversal point, I do like to see bearish divergences on the chart appearing as well. But at the moment, we do not have bearish divergences. So yes, we made lower highs over here, but we didn't make higher highs on the CVD, which is a bearish divergence. So even if I go to the 15-minute and actually go to the high that we've made over here, yes, we have a lower high, and the CVD came quite close to this high over here, but it didn't go above. And if I actually put my cursor right on top of the high over here, you can see that the yellow lines, these highs over here, did not go above my cursor line at the moment. And if there is a very big reversal area, I do like to see some bearish divergences as well, which we did not have in this whole structure at the moment. So that is definitely something to take into account, right? Okay, so now we've gone through basically the support area. Still very valid. However, on this channel, of course, we don't necessarily like to catch knives. Of course, a potential trading setup is very valid over here. Stop loss below the low trading it to the upside. A more safer option, I would say, is to wait for at least a little bit of a structural change, especially if we're looking for a wave 5 to the upside. It needs to be an impulse where the impulse has to start with a 5-wave structure. So over here, that's why I drew it on the chart, we then have potentially a 5-wave structure, right? We're waiting in that case, in a more safer trading scenario, waiting for a 5-wave structure to the upside, and then during the correction down, that is then the potential trading setup. And that is very, very similar to the trading setup that I showed over here. When price was in this structure over here, and we saw this impulse out of this range, I said, hey, this retracement went to the 0.5, and I gave the trading setup at that moment in time as well, where longs could be laddered over here, stop loss below this low for a trade to the upside, and then eventually see how it worked out, right? Of course, educational guys, it's YouTube, but something like this, right, is a bit more safer instead of trying to catch the lows. Of course, this is a valid support area, as I've explained, with the confluences that we had. So yes, a potential scenario is to enter here, stop loss below, trading it to the upside, but the more safer option is the one that I have on my chart right now. Now, if we then go to the bearish scenario over here, as mentioned, we do not have CVD divergences at the highs. That is something to take into account. But in this particular scenario, we're looking at a 1-2-1-2. So 5-wave move down in a 1, then a wave 2 over here, then a leading diagonal in wave 1, then a wave 2 retracing to the 886, which is a rare target for wave 2, and then eventually we have this 3 to the downside. So in this particular scenario, you actually like to see volume increasing, moving to the downside, but as it stands now, the volume is not increasing. So the highest amount of volume was in this wave 1 at the moment, and then we have this wave 1, this wave 2, but if this is a wave 3, of a bigger wave 3, you definitely want to see volume picking up. But even if inside this structure itself, you can see that the volume is slowing down, and also to this wave 1 over here, volume slowing down, which is usually more of like a C wave kind of sign. Of course, volume can still pick up if it continues to the downside, and yeah, well, maybe it, the big move is not finished yet, but usually if this is a 1-2-1-2, you eventually want to see volume increase to the downside, and at the moment we just haven't seen that just yet. Now, if you then go to the leading diagonal and actually go to the 15-minute, I do want to show you that this leading diagonal, at least this diagonal potential scenario over here, in this being a first structure, a wave 1, is valid. If this is a 1-2, most common target for a wave 2 in a leading diagonal, common target for a wave 3 in a diagonal, common target for a wave 4, and also the common target for a wave 5, and then a 1, 2, 3, 4, 5. So that is actually quite valid within a 3-wave structure in this wave 2. So the diagonal is definitely a potential scenario in that wave 1, but usually if we do have a 1-2-1-2 structure, I like to see a 1, 2, and then another 1, 2 before then a bigger 3 to the downside, where the second one takes the low of the first one, which as you can see is not the case, because this second one did not take the low of this first one, and that is something to take into account as well. So therefore, because of the volume and a little bit of like struggle with this wave 1, I actually thought of, hey, okay, there might be another bearish scenario in play where this is a wave 1, this is then a corrective structure in a wave 2, so this leading diagonal might then be something else. This is the high of wave 2, and then a WXY type of scenario, before then this being another wave 1. So then we have a 1, 2, another 1, 2 before then a 3 to the downside. Now the invalidation for this scenario is taking the high at 30.5k, which is also the same invalidation as the other bearish scenario, where again the high over here 30.5k is the invalidation for both of these bearish scenarios. And the invalidation for me for this bullish scenario is basically taking the lows of this little range over here, which is at, let me have a quick look here, at 29.067. So if I put the invalidation on, that is an invalidation. Then we're going to get very, very low, right? And that's something we don't want to see. So yeah, this is what I wanted to say. I hope this video was helpful or valuable to you. I'd like to thank you for watching and subscribing, and I will see you at the next one. Bye bye.